where we bring experts around a specific topic. Today we have finance. It's actually the second one. We just reminded ourselves that it was a whole 2 weeks ago that we did the last one. It feels about a year. So obviously a lot has happened in between. You know, arguably some things are clearer, some things are not as clear. But we are really pleased to have Moore Kingston Smith, who are chartered accountants and business advisors, here again to help you answer all of your questions. Before I hand over to Ant, who's just going to talk you through how this afternoon is going to work, I just wanted to give you a heads up on what else is happening this week and next. So we have a hangout around mentoring and how critical it is right now and how to get the most out of remote mentoring on Wednesday. We have our regular leadership roundtable on Thursday, and I think we have maybe a couple of spaces left. If not, there'll be another one next Thursday. And we'll have a tech leaders meeting next week as well. There may be more things to add to that, but that's what's in the diary at the moment. So Ant, can I pass over?
Sure, thank you, Holly. Before we hand over to Esther, I just wanted to quickly go over kind of how this is going to work. Apologies if you've joined all of our talks before, but for anyone new, what's going to happen is Esther's going to be our host. They'll have a discussion based around your questions, and then make sure you ask any questions that you have by clicking that Q&A button at the bottom of the screen. If you click that, a window should pop up. You'll be able to type in your question, and then either our panel can answer them live, or they can type a little answer back to you. So don't be shy. Feel free to ask any questions that you want. You can as well ask questions anonymously if you don't feel comfortable putting your name out there. So yeah, don't feel free to put any question that you may have about finance, business, anything like that in that Q&A button. So remember, it's that Q&A button at the bottom of the screen. Click that, type in your questions, and you should be good to go. But without further ado, I'm going to hand over to Esther, and then she can get things started.
Thank you very much, Holly. Thank you very much, Ant. So welcome to this afternoon's session. As Holly said, we did do this session a couple of weeks ago, and so since then we've had some new information. So some of it will be clarification of what we didn't know before, and what we've done again is we've pulled together a bank of frequently asked questions that we've had from clients asking us questions and from other webinars that we've done. So we've pulled together a team of experts today. We've got Tim Stovold, one of our tax partners. We've got Ian Robert, one of our insolvency partners. We've got Paul Winterflood, a corporate finance director, and we've got Amy Cresson, who's one of our HR consultants. So I think, you know, the topic that still gets most frequently asked about is furloughing. So I think we'll start there. So I think most people are probably now pretty much aware of the government support available for furloughing employees. And certainly many of my clients have either already done it or are certainly thinking about which employees they might go about furloughing. But there is a lot more clarification since we last did this webinar with you. And in particular, Tim, are you there, Tim? In particular, I think we've finally got some clarification around the actual process that we have to go through to claim this government grant. Tim, do you want to tell us a bit more about that?
Yeah, I mean, what interrupted our weekends was more guidance came out. So we always knew it was going to be an online system. We're once again reassured the online system will be available by the end of April. There's lots of data points that you'll need to collect and extract from the payroll in order to actually input into the online system, but we'll take it as read that you know the date that you furloughed your employees and who they are and their national insurance numbers and all that sort of thing. The rather troubling thing that's come out over the weekend, though, is which bit of the revenues online architecture they're using. And they're using, I suppose, fairly unsurprisingly, the PAYE online services. PAYE online services will be used by some employers to download tax codes and to monitor payments they make to the revenue. But if you use a payroll bureau to process your payroll, there's a very good chance that you don't have an online services account, and you'll need to now set one up. Now, anybody who's got an EMI share scheme, if you're a smaller employer out there who's got EMI share options, you would have needed to go through the fairly tortuous process of registering for online services, because when you grant options and when you complete your annual returns, you've got to do it through the online services. So we've got a reasonable amount of familiarity with how the online services work because we need them for that purpose. However, in lockdown mode, the online services are a bit of a nonsense, because if you don't have a PAYE online services account, you now need to apply for one. So you start by with a government gateway account. You may or may not have one of those. If you haven't got one of those, you can register that quite quickly. In order then to activate your online services for PAYE, you go in through your government gateway account and you activate your PAYE online services, and a letter comes out in the post to your normal business address where your PAYE scheme is registered, and that's effectively got your activation key on it. Now, why it's a bit of a nonsense is nobody's turning up to the office anymore. So to start with, you're going to need to jump on the phone to the revenue, update the address that the revenue have for your PAYE scheme, then go through the process of registering for online services, then hope the postman actually delivers the bit of post to you. And I know I'm waiting for bits of post and it's all fairly delayed at the moment. You know, hope that comes through. The revenue say they'll issue the activation key within 10 days. Well, there's going to be about 1 million businesses applying for them. So don't expect that 10-day deadline to be kept to. And when that activation code comes out, you then have to enter that within 28 days, and then you're good to go. And hopefully have done all of that before the end of April, because that's going to be your entry point into the online system. So that the big concern is, one, the online services system and the 10 days, all of those time periods are going to stretch. And two, the really important bit of paper is probably going to go to an address where nobody's got any access to. So it's not good that that's the system we're relying on.
So it's going to be some time before businesses are actually going to see the cash coming through from this grant then, isn't it, Tim?
Well, I mean, I still think if the online system is up and running by the end of April, the furloughing started at the very earliest on the 1st of March. So there might be some March payroll, some April payroll to get in. Let's say you can get 2 months worth of payroll into the system at the end of April. I think you're probably then looking at mid-May being the earliest before the cash is going to arrive. Yeah. Now, if you allow for a bit of slippage in the online system being ready, and you allow for a bit of slippage in the revenue actually processing the claims and sending the money out, that middle of May becomes late May, early June.
Yeah, it's pretty disappointing. I think a lot of businesses are going to be wanting to see the cash a bit earlier than that, but nevertheless, there's not a lot we can do about that right now. So another clarification that's come through has been around directors and whether they can be furloughed. Do you want to tell us a bit about that, Tim?
Yeah, I mean, a matter of fierce debate. So the government had religiously used the word employee throughout all of their furloughing guidance, and employees are not directors. Directors are something completely different. And then there was a question about whether directors, with their fiduciary duties towards the company that they owe the company, whether they can even be furloughed, because once you're furloughed, you can do nothing. And if you have obligations set out as a matter of company law, can you opt not to do them? So, you know, the jury was out until this weekend. I think probably the balance of views from the commentators was that directors probably could be furloughed, but we've had confirmation that directors, and for that matter, salaried members of LLPs, which are slightly rarer beasts, but directors can be furloughed. They can't provide any service back to the company, but they can do sort of basic company law, statutory stuff like file their accounts. So directors can be furloughed. Directors of personal service companies, those directors who take out a low salary and a high dividend, yes, they can be furloughed, but it isn't going to be worth much to them because the furlough grant is based on their salary and not their dividend.
Yeah, so they are, as we understand it at the moment, they are going to lose out, aren't they?
Yeah, they're falling between the gaps between all the schemes. They're not looked after.
No. Okay, and what about, in fact, we've had a question come in here. What about the activity that employees can actually do whilst they're on furlough? Obviously, we've been told that they can't really do anything at all, but obviously, you know, there's people at home, we want to keep them engaged with the business. Can they keep in touch, you know, through Google Hangouts, through social events?
It appears so. I mean, the only guidance, and even what the revenue have issued this weekend, only restates what they said before. And there are two things that employees can't do. They can't provide any service back to their employer, and they can't directly or indirectly generate any income, but they can carry out training, and they're positively encouraged to go off and do some training. Now, if the business, in wanting to take responsibility or at least contribute towards the well-being of their employees, wants to get them together, I know in our business we're doing a virtual pub quiz coming up soon, and just to make sure that people who often might be on their own have some touch points with the outer world. I don't think that could be construed as providing a service back to the employer. But a pub quiz is one extreme. If there's some sort of reporting back of company performance back to the employees, and one of them pipes up and says, look, well, have you thought about doing this? That might be a good idea. Well, strictly, if the revenue were listening into that, that employee has just provided a service back to their employer. So there's a whole grey area of what can be done. And if the revenue have already made it clear that they're going to come in and audit these grants later, I think the government are under pressure to get the cash moving, so it'll be a case of pay the grant now, come and ask questions later. And if the question is, look, prove to us that on that Google Hangout or Zoom call, no service was provided by your employees, very difficult to prove. So on the one hand, yep, fun stuff like pub quiz is great. The sort of grey area where it's a bit of download on company performance back to the employees, just be careful that nothing could be construed to be the employees giving a service, but the actually do any work, strict no, not if you want the grant.
Okay, thanks, Tim. And another area I think people are still asking questions around, I think there's perhaps a little bit of misunderstanding in terms of this £2,500. This £2,500 has to go through the payroll, doesn't it? And it is subject to tax deductions. And then what about some things like employers' national insurance and pension contributions? Where does the employer stand on having to pay for those versus the grant that they'll get for those?
Yeah, I mean, well, let's start from the beginning of how you calculate the grant, because one of the big misconceptions is what salary you're using when you calculate your 80%. So first things first, on a simple employee with a fixed salary, same salary every month, to calculate the 80%, you go back to the February 2020 payroll, look at the gross salary that went through, together with any other sort of non-discretionary elements. So you strip out things like discretionary bonuses, but you can include, I think, overtime in the guidance as can be included. But you look at the February salary, multiply that by 80%. Now, if that figure is lower than 2,500, that is your grant from government, and then the government will also pay on top of that the associated employers' national insurance and the minimum employer's pension contribution, provided that pension contribution is actually being made. If when you multiply the February salary by 80%, you get to a figure that's more than 2,500, then it's capped at 2,500. And again, you get the associated employer's national insurance and pension contribution. So if what you do is you reduce your employee salary down to 2,500 because you've got somebody, let's say, earning £40,000, the £2,500 is less than 80% of the monthly equivalent. So you cap out the salary at 2.5. You agree, and Amy will talk through this in a moment, with the employees that you can pay them just the 2.5 and not their normal salary. The total grant you're going to receive from government is about 2,800. So it's a 2,500 salary which goes through the payroll, and then a few bits on top to cover the employer's national insurance and the employer's pension.
Yeah, okay, thanks. And do businesses have to be in a sort of really financially difficult position before they can claim this, or is it literally a case of there is no work available for particular employees? I mean, do businesses have to be making a loss before they can claim it?
There's no business test. So you could be the most profitable business in the country, but just happen to have no work for a subset of your employees. So those employees can be furloughed if there's no work for them. The guidance released over the weekend does emphasize a bit more that this is a job retention scheme, and it's there as an alternative to redundancy, and it's only for employees who've got no work because of COVID. But a lot of that, I think, is a nod towards the employment law aspects of this, that you can't, you've got to behave fairly towards your employees.
And what happens if we subsequently make them redundant? Is there going to be a clawback of the grant that we've claimed on a particular individual?
No, I mean, in the guidance, it anticipates that when the scheme comes to an end, which is at present 31st of May, then the only alternative might be to move towards redundancy discussions, and there's no clawback. The only time there'll be clawback is if the claim's made erroneously or fraudulently using the revenues terms. And the biggest error I think people can make in all of this is sending their employees home and then giving them work to do. You know, that's where this scheme is going to go wrong, for the vast majority where it goes wrong.
And tell us a bit more about you sort of, I think we were talking about it before we came on board, this flip-flopping, because I think that might be quite attractive to some employers who don't have lots of employees with the same skill sets.
Yeah, well, I mean, let's assume the scheme is going to continue on beyond the end of May. That's by no means certain, and certain commentators are already quoting government sources to say it won't be, but let's just assume it will be for the moment. The question we get most often is a business has some work for employees, but not enough to keep them fully occupied. So can you half flip-flop somebody? To which the answer is no. Can you half furlough somebody? To which the answer is no. You either furlough somebody or you don't. So we were looking at whether you could furlough somebody, take them off furlough, and then furlough them again sometime later. Now, we've got a few constraints in that. The minimum period to furlough an employee, if you want to be entitled to the government grant, is 3 weeks. You can furlough somebody for a shorter period, but when you put your grant application in, it won't get approved. So you could furlough somebody for 3 weeks from today, and then bring them back in the business for 3 weeks, and then furlough them again for 3 weeks, and so on and so on. So you flip-flop them in and out of furloughing. The guidance released over the weekend confirmed that was possible, that you could furlough somebody as many times as you wanted. And that 3 weeks on, 3 weeks off is effectively how you'd deal with somebody that had half the amount of work for. I know, Esther, you and I have talked about I think it was a client of yours where you said, you know, could they furlough them for 3 weeks, bring them back in for a couple of days just to see what creative thoughts they've been having, and then furlough them again if the creative thoughts weren't enough to generate any work for them. But bringing people back in the business between consecutive periods of furloughing seems to be quite attractive.
Yeah, okay, that's great. Thanks, Tim. Amy, I think if I can bring you in now to answer some of the sort of the more HR related questions around furloughing. Amy, have we got you there, Amy?
Yeah, I'm here.
Yeah, okay. So in terms of the actual process for furloughing then, what is the process that people should be going through, particularly in sort of making sure that they avoid any claims further down the line from people who maybe think they've been unfairly furloughed?
Yeah, so the first thing is to make sure that you're not breaching the contract. So the very first step is to look at your contracts of employment and see if you've got a certain clause in there. It's usually either called short-time working or layoff, and the specific wording you'd be looking for is something along the lines of shortage of work in emergency situations. If you have that clause in there, it means you can enforce this just with reasonable notice. So we say that's around about a week, but obviously in certain circumstances, that's just not possible. So give as much notice as you can, even if that's just a couple of days. If you don't have these in your contracts, then to enforce it would be a breach of contract. So you'd need to technically either consult with your employees to force these terms through, or you can get consent from them, and then it's a much quicker process. So obviously consultation can be quite lengthy. So if you've got more than 20 staff that are affected, you're looking at either 30 or 45 days. It's not a very nice process because to enforce it, you have to dismiss and re-engage. So if you can avoid it, obviously that's much better for everyone. So if you're looking to furlough everyone, the best thing to do is ask for volunteers first of all. There might be some people that actually it would really benefit them to be on furlough, and they put their hands up quite easily. Aside from that, you can then try and get people's consent. So the way to do this is just to be really communicative, really transparent, explain exactly why you're in this situation, what it means for the company, and the fact that it's to protect their jobs. So this is a job retention scheme. You want to avoid redundancies at all costs. You want there to be a company for them to come back to at the end of it. And this is one of the ways of doing that. So get their consent. Once you've had the volunteers and you've got the consent of probably the majority, which is what we see in, there should just be a very select few that you'd then need to consult with, and hopefully by that point there's less than 20 and you can do it in a much shorter time frame.
I mean, certainly in my experience with my clients, actually most of my clients haven't had any problems at all or pushback with sort of the conversations they've had around furloughing. Everyone's actually been really understanding.
Yeah,
which is pretty pleasing.
Yeah.
And does furloughing relate to specific roles, or can any role be furloughed?
No, any role can be furloughed as long as they're on the payroll. It doesn't matter what the person's doing. If there's no work for them to do, then yes, they can be furloughed.
Now, obviously, we have the option to top people up, don't we, to their sort of their market rate salary that we were paying them. But what if we've already implemented pay cuts and then we do the furloughing scheme? What would we apply the 80% to, and where do we stand with topping people up then? Are we obliged to top up?
You don't have to top up. No, that's the employer's choice. So if you want to, and a lot of my clients are, to be honest, then obviously you can do, but you're under no obligation. And one thing to bear in mind is if you're not furloughing everyone, those that are still in the business, it might be slightly demotivating to them if everyone else is being topped up to 100% and not having to work. So it's just something to bear in mind. But yeah, so you don't have to top up at all. And if you've already made pay reductions, as long as it wasn't in February, you're okay. So it's the February payroll you're looking at in terms of what to base the 80% on. So if you've made reductions after that, then you're okay.
And presumably if we've had employees who have started after the 28th of February, then they're not eligible for furloughing at all.
No, so up until this week. No, so up until this weekend, we were saying if you've had someone start after the 28th, but before the announcement on the 20th of March, to get their contract ready, because if there is some kind of announcement in the meantime that says that they can be furloughed, it's good to have all your documentation ready as evidence, but it's looking less and less likely that that's going to happen now. So we've just had another kind of more further updates at the weekend and it wasn't in there. So unfortunately, it's looking like if they weren't with you as of the 28th, then they can't be furloughed.
So if we've had people that we've offered contracts to and we know we're not going to be able to furlough them and we don't think we've got the work for them, we should be having conversations around trying to push their start dates back?
Yeah, there's a few options. So you can delay the start date. That's probably the best thing to do in terms of it's cleaner because the contract still carries on just as of a new date. You can withdraw the offer, but you need to look at the notice period. So if the offer wasn't conditional of certain things, then to withdraw the offer, you might need to pay the notice period, which is usually whatever's in there for the probationary period. It's often a week. But if you don't do that, you're potentially breaching the contract because as soon as an offer has been given and accepted, that contract is now in play. Or you might want to, if it's someone that you really want in the business and you're confident that that work will be there in kind of 3 months' time, and you don't want them to find work elsewhere, you could potentially furlough them and just take the hit on pay yourself. You just obviously wouldn't be able to apply for the grant and have that reimbursed. But if you wanted to do that, then that option is available to you as well.
And what if we've already laid people off before hearing about the government scheme? Where do we stand with those people?
So if you've laid them off up until the 1st of March, you can backdate it. So if you laid them off before that, the cut-off is the 1st of March. But if it's been since then, the last day that they did any work for the company, you can backdate the claim to then.
Okay. And there's a lot of questions. In fact, there's a question come in this afternoon about annual leave and how we handle that in terms of whether we can make people take annual leave when they're on furlough, whether people accrue holiday entitlement when they're on furlough. Can you just sort of elaborate a bit more around that?
Yeah, so it's difficult, the holiday piece, because they haven't been very explicit in the guidance. But essentially, before the 20th of March, the only option that was available to employers was either layoff regulations or redundancies. So under the layoff regulations, any workless days, employees can't take holiday on those, and that's in there as explicitly. The furloughing, we're working on the basis that it's an extension of that regulation. So without the guidance for furlough being explicit about holidays, we're saying follow the layoff regulations and people can't take holiday during workless days because you're changing their status of work as well. So they're no longer an employee for this period, they're furloughed. And on a workless day, you can't take holiday. So we're saying you can't book annual leave. And if you've already got it booked, it essentially gets cancelled automatically and you'll have it back in lieu at the end of that period.
And what about people who are either already on maternity leave or who are expecting and not on maternity leave yet? Can they be furloughed? Do we have to be careful around how we treat them?
Yeah, so if they're not on maternity leave yet, you can furlough them if there's no work for them. And then the maternity would just automatically kick in on the date that they've already agreed to go or the date that their baby's born, whichever one comes first. If they're already on maternity leave, you can't furlough them exactly. You can't change their status, but if you enhance your maternity pay, you can claim 80% of the enhancement back from within the claim as well. So that's only if you enhance maternity pay though.
Okay. And we've got a question here around what if the I don't know whether this is one for you, Amy, or Tim, but if the furlough payments don't come through by the end of April, which we've sort of established that they probably won't, are employers still obliged to actually pay the employees the 80% and then wait for it to come back from government?
Yeah, I mean, the payroll and your obligations towards your employee exists entirely independently from the grant. The grant is just how you're going to fund the payroll. So you still have the obligation to pay your employees. We've certainly had this same question through from our clients. You know, and if you can start a conversation with your employees to say, look, until the grant comes through, we simply can't afford to pay you, but we've got to put this thing through the payroll in order to enable us to submit our claim. So would it be okay to put it through the payroll and effectively for you to lend your net salary back to the company until such time as we've had the furloughing grant? That's a fairly trusting set of employees, but the conversations with employees, you know, you're going to do lots of first-time conversations with employees. If the employees are faced with a redundancy situation or staying on the payroll and having to wait for the money to come through, they might prefer to just wait. But that's all I can suggest. That there was on another session, I don't think it was the BIMA session, somebody had said they'd had guidance from the revenue to say, well, don't worry, don't put anything through the payroll, and when you get the grant through, go back and revise your payroll through the RTI system, submit effectively a sort of in-year adjustment. I just didn't like the sound of that at all, but I think that's somebody trying to be helpful at the revenue, and if that's audited later that you've put through some sort of backdated adjustment through the payroll, I just think you're putting your grant at risk there, that it might get clawed back. That's not what the scheme's intended to achieve. So yes, have a conversation with the employees, try and convince them to lend their net salary back. You as an employer would still be on the hook for the PAYE due by the 22nd of May.
Yeah.
But you know, hopefully that's come through by then.
Yeah. That's great, thanks. And there's another question there, probably back to you, Amy, in terms of annual leave during furlough and not being able to take the annual leave during that period. Somebody's asked, how does this extend to bank holidays?
So bank holidays is one of the things that we're actually unsure of at the moment, unfortunately, because all of the guidance and all of the regulations within layoff specifically refer to the 4-week statutory. So that doesn't include the bank holidays. What we don't know is when you put the claim through, if you'll be able to claim for the bank holidays, or if you can't claim for the bank holidays, then you must have to give them back. If you can claim for them, we're unsure if then you just have to top up for the bank holidays or if it's going to be included at all. It's one of those kind of watch this space things, I think, at the moment. Until the portal goes live, we're a bit none the wiser, unfortunately. But like I said, the guidance or the regulations all talk about the 4 weeks specifically, so the 20 days statutory. So if you enhance your holiday, you also don't have to give more than that either. So.
And somebody else has, we talked about whether if you'd already reduced somebody's pay, when you then furloughed them, to which pay does the 80% apply? Somebody's asked a question saying, could go back to the sort of the reduction in pay and furloughing, and they were under the impression that you couldn't reduce pay for employees and then place them onto furlough at a later date. Could you clarify whether that is possible, Amy?
Yeah, you can do. So you'd either reduce their pay based on the fact that you need them to work, but you just can't afford to pay them full pay. So you would get their consent to do that. Or you'd put them on short-time working. So it might be that you have some work for them to do. So you can't furlough them, but obviously not enough to be full-time. So you can do that. And then if you were to place them on furlough at a later date, that's when there's no work at all. So as soon as there's no work for them to do, as long as it's before the 31st of May, you can then furlough them from that date. But the 80% is always from the February 2020 payroll.
Yeah, okay, great. And what about parents who've got children and the reason they can't work is because there's no childcare available for their children? Where do we stand with furloughing those?
So this actually came up at the weekend. So before this weekend, it was dependence leave, which is unfortunately unpaid. So there wasn't a lot of options open for parents. Obviously, all the schools now are closed, childcare's closed. So I think the government has has actually done something about it and brought those in as well. So now, even if there is work for those people to do, if they have childcare issues and so they can't work because of those issues, you can furlough them. But it is the employer's choice. You don't have to. But the option is there.
Okay, and just again, we've getting quite a lot of questions in around what people can do when they're furloughed. I think we're quite clear that they can't do any work for the employer, or any sort of work that might generate income, anything like that. But what can they do while they're on furlough?
So they can do training. The only thing to bear in mind is if someone is going to attend a training course or do some training while they're on furlough, if the 80% has taken them below minimum wage or the national living wage, you will need to top that up for the days that they're doing training, so that they're not falling below that. You can, if there's any consultation, for example, we mentioned redundancies earlier, if it ends up in redundancy situations anyway while they're on furlough, you can consult with them, because for the period of furlough that wouldn't be considered work. There's rules around at the point that you give notice, but I'm sure we'll come on to that later. But so you can consult with them, and essentially you can communicate with them. You can keep them up to date on company information, as long as you're not, I mean, Tim can probably clarify this better than I can, but as long as you're not generating income or providing a service, it's a bit grey. But yeah, you can communicate with your staff and keep them up to date on stuff, especially if you've only got half the employees off, for example. You'd want to keep them regularly updated.
Yeah, I think as long as it's a one-way street, the provision of a service by an employee back to their employer is the other way around, isn't it? The employee doing something for their employer, but the employer can can give them information just to sort of keep them informed. There's a couple of questions on the Q&A that are just coming in, which I just think is worth clarifying. I started typing the answer, which is why I'm just hesitating slightly, which I'll answer live. So you're absolutely right. You can't reduce somebody's pay and reduce their hours and furlough them, because that's sort of half furloughing, and furloughing is an all or nothing. So I think we might have been answering a slightly different question. The question which we were answering was, look, you can, if somebody's on a salary of £3,000 a month, you can reduce their salary down to £1,500 a month and have them only working half time as your first measure. You're still not entitled to the grant at that point because they're not furloughed. But once you've reduced their salary, you could take it further and say, look, we're now going to furlough you. And that means that they are then furloughed by reference to their February 2020 salary. So all the guidance which says that you can't furlough somebody who's working on reduced hour or reduced pay is saying that if they're on reduced hours, they are still providing a service back to their employer, and therefore they are not furloughed. You have to actually reduce their working hours down to 0 in order for them to be furloughed. But there's nothing wrong with you having as a middle step, having them on reduced hours, reduced pay, but the entitlement to the grant won't kick in until such time as you've furloughed them entirely. If you want to half furlough, then we come back to this concept of flip-flop furloughing, where you furlough them for 3 weeks and then you bring them back into the business, then you furlough them for another 3 weeks. But these two statements are not incompatible. You can have somebody on reduced hours and reduced pay and then later furlough them, but you can't furlough them whilst on reduced hours or reduced pay.
Yeah, okay, thanks, Tim. I think that is an important clarification there. And just one other question I was going to ask, I mean, maybe it's you, Tim, but whilst you're furloughed, can you do other paid work that's not for your employer?
Yeah, I mean, the guidance over the weekend made it even clearer than what we'd seen before. As long as you're not working for a connected or related employer, so it's not if you're working as part of a big group of companies, you can't be furloughed from subsidiary A to go and work for subsidiary B. But if you're furloughed and receiving your salary funded by the furlough grant and you find employment elsewhere, you can do that. You can effectively go and take another job and still be paid your salary by your previous employer. That's within the rules of the furloughing scheme. What your contract says is a completely different matter. If your contract says you work for us and nobody else, and there's a conflict of interest clause or a don't work for anybody else clause, then the employee going off and working for somebody else is in breach of that contract. That's going to be a bigger issue if they go and work for one of your competitors. There's going to be less of an issue if they go and stack shelves in Tesco's. So it comes down to what the facts of each matter are.
Yeah, okay, thanks. I think we'll stick with you, Tim, and move away from furloughing. Now, what about, because obviously furloughing is relevant to people who are employed, and obviously this industry uses a lot of self-employed people or the freelancers, and there has now been a package introduced since we last did this webinar for freelance people. Could you just talk a bit about how it works for the self-employed?
Yeah, I mean, let's pick up one of the questions that came in the chat rather than the Q&A, which is the people who are falling between the gaps. So when Esther, you and I talk about freelancers, we're talking about what, you know, the freelancer population that we deal with day in, day out. Typically, they're an individual that has their own company and they provide their services through that company to their clients, and they will be, you know, flexible staff. You know, they might have 10 different clients in the course of a year. From their company, they take a small salary because that's what their accountants told them to do. It's the most tax efficient thing to do, and everything else is paid to them as dividend. They fall between the cracks, as the question rightly says. I always say fall between the gaps, fall between the cracks. What they're entitled to under the furloughing scheme is next to nothing, because they're entitled to 80% of their very low salary they've been taking. And what they're entitled to under the self-employed scheme, because although you and I might consider them a self-employed or a freelancer, they're not self-employed for the purposes of this scheme, so they get nothing under the self-employed scheme. So those people are not helped out at all. So far, I think the question is, do we think that anybody's going to do anything about that? I'm afraid the short answer is no. There's quite a lot of lobbying going on from various different trade associations, and it seems to be falling on deaf ears. The only response I've seen from government is an encouragement to go off and look at universal credit or the mortgage payment holiday, which has been lost in the detail, but there's a 3-month mortgage payment holiday if you choose to take it. Now, if you are a rare beast and you are a truly self-employed person, meaning you provide your services as an individual, not on the payroll, but as an individual, and you declare self-employment income on your tax return, then you can benefit from a scheme that looks a little bit like the furloughing scheme. So this, instead of being based on your salary on the 28th of February 2020, the self-employed scheme is all by reference to your tax return for the tax year 2018-19. In order to qualify for the scheme, you must have had self-employment income on that tax return, and you must have submitted it. And if you haven't submitted it, the time's running out, because there's only an extension till the 23rd, I think, to bring that tax return up to date. And if you don't file that late tax return by that date, then you're also excluded from the scheme. The amount which you're due, again, it runs for the same period from the 1st of March to the 31st of May. It's the lower of 80% of your average profits over the 3 years to the end of the 2018-19 tax year, or it's £2,500 a month if greater. So as long as your profits have been at a reasonable level, the likelihood is that you're entitled to £2,500 a month for 3 months, and that will be paid as a lump sum into your bank account in probably June, July time. There are various conditions to the scheme. The ones that are or the main one that's upsetting people is if your profits are greater than £50,000, either in the 2018-19 year or on average over the 3 years up to 2018-19, then you're completely excluded from this scheme. You're too profitable to be able to benefit. And also your self-employment income must be more than half of your total income. So if you're an employee with a self-employment on the side, that happens a lot in TV and film, that some roles you take might be employed, some roles you take might be self-employed. Unless your self-employed income is greater than 50% of your total income, you're also excluded from the scheme. So it's a scheme with quite a few conditions. Different to the furloughing scheme, you can carry on working. So there's no need to furlough yourself. You can carry on your self-employment whilst claiming under the scheme. So that's a good feature. But otherwise, it's quite fiddly. I suppose one thing that's an advantage of this over the furloughing scheme is the revenue already know who qualifies for this. So it's a matter of waiting for them to invite you to apply, rather than having to fill out any online portal in order to make your claim. So the revenue will be writing to you to invite you to apply if you're self-employed around about late June time, I think, and then the money will flow after that.
Okay, great. Thanks, Tim. Just moving on now to some of the sort of the government support around the deferral of the payment of taxes. Obviously, we've got the automatic deferral of the VAT and the automatic deferral of the self-assessment. But am I still right in thinking we need to specifically apply for PAYE and corporation tax, don't we? And what sort of success are businesses having with getting deferral on those?
Yeah, I mean, the success rates still sound good. The time to pay hotline. So if you've not found this yet, put in time to pay coronavirus and HMRC into Google all in one go, and it should take you straight there. The telephone number changed a week or so ago, so make sure you grab the new number and not the old one. That hotline is there to ring up to agree deferment of any taxes. So as Esther, as you rightly say, VAT due between the 20th of March and the 30th of June is automatically deferred. There's no need to make any application there, but all the other taxes, if you want to defer them, you'd need to agree it with the time to pay hotline. Our experience with our clients, I've not had any feedback in the last week or so, but experience up until now was that 3 months deferral of the PAYE was perfectly possible without too much violin playing. And the corporation tax bill, if you've got a corporation tax bill falling due soon, you might have had one due on the 1st of April or the 1st of May, then you can normally agree to pay that off in instalments. So I've seen that moved over to 10 instalments or deferred altogether.
Yeah, I think that's right. I mean, I think most of my clients have managed a 3-month deferment on the PAYE, but I think what a lot of them are concerned about is what happens when that 3 months is up and they've got a big balance owing to HMRC, because that liability doesn't go away, does it, Tim? It's literally just kicking the can down the road. Yeah, what's the likelihood of HMRC then entering into new arrangements?
Well, I think you know, we've seen this pattern before, although never on this scale, but during the financial crisis a few years ago, the time to pay hotline came into existence again, and it starts off easy, and when you go back for your second or third bite of the cherry and want to defer again or move on to instalments, the revenue will requiring greater and greater information to the extent that they want to see what all your outgoings are, what measures you've implemented for cost cutting, what other avenues of finance you've explored. So I think you might get some of those questions, but maybe only an inch deep at the beginning. But if you go back a second or third time to try and move these deferred payments onto instalments, you're going to have to work quite a lot harder to get them moved onto instalments. It's not unusual, even back in the financial crash, that you're unable to agree something and then you're doing the dance with debt collectors coming to, you know, personal home or business addresses. So the stress levels do go up enormously.
Yeah, I can imagine. Thanks, Tim. I think we'll bring Paul in now. Paul, have we got Paul there still? Yeah. So, Paul, there's been a lot in the press around businesses having real trouble accessing these government sort of loans. Is this true, or is this just the press stoking things up?
No, I think that's completely true. I think so. This scheme was one of the first announced, and as you say, it's probably the most controversial one. At the end of last week, there were some stats announced that so far 1,000 facilities had been approved, about a total of 90.5 million. But then, if you compare that to the number of inquiries about the scheme, I think the stat I saw was 130,000. The banks had 130,000 inquiries in total. So that really is a tiny percentage, and so. There has been a few revisions since it was launched. So first, it's probably worth giving a little bit of background in terms of the scheme. So the scheme I'm referring to is the one for businesses with turnover up to £45 million. And the scheme was very much launched to try and encourage banks to lend to SMEs. I think at the moment the frustrations are both on the bank side as well as the SME side. Businesses are thinking it's the banks that are causing the problem, and I'm sympathetic to that view. But equally, banks have very strict lending and liquidity rules that they need to abide to. So in turn, it's then getting pushed back to the government. I think it's worth me mentioning the two key points that underwrite the scheme. Firstly, that the borrower is 100% liable for the debt, regardless of the fact that the government underwrite 80%, and I think that is where quite a bit of the confusion comes from. and secondly, that the business must have been a viable one prior to the coronavirus crisis. I think, therefore, if you are considering using the scheme, then you need to consider whether you would have been able to borrow prior to the crisis. If you wouldn't have been, then you're probably not going to you're still not going to get much success. And then in the future, if you've got no realistic prospect of repaying the money, then again the scheme is unlikely to be suitable for you.
And what about personal guarantees? Where do businesses stand with having to give personal guarantees against these loans?
So that's one area where there has been a bit of movement. So initially, the guidance was that it would be at the lender's discretion, but the first 250,000 of loans could be security free. What happened was the Royal Bank of Scotland, probably because the government lent on them as they still own them, it said they weren't requiring personal guarantees. About a week or so ago, there was a U-turn where the other high street banks then followed suit and said they wouldn't require personal guarantees on loans up to 250,000. Then on Friday, when there was a further revision to the scheme, banks all of the institutions that are signed up to the scheme can no longer ask for personal guarantees under 250,000. And the other point that has changed is now the personal guarantees can only be pursued on the final 20%, so the 20% which isn't insured by the government. So if you are defaulting, or if you're unable to pay the loan, then initially the borrower or the business in this case will be initially pursued for 100% of the debt. If you signed up to a personal guarantee, then it would only be the 20% that you would be pursued for if all the business assets have already been utilised.
Okay, great. And just remind us, Paul, how can we actually borrow under these government approved schemes?
So for the initial scheme, which is the one for businesses that turnover up to 45 million, the maximum is £5 million, subject to a few other clauses, which is that the business can borrow the higher of 25% of 2019 turnover and double the annual wage costs of the company.
Okay, that's great. And I mean, on a practical point, Paul, what sort of information are businesses going to have to provide to the banks in order to demonstrate that they were a viable business and profitable before coronavirus hit, such that they qualify for these loans?
So in terms of to provide evidence that you were a viable business prior to the crisis, you will be asked to provide historic statutory accounts. Normally a couple of years worth, depending on the business. You'll also be asked to provide the management accounts up until the end of February in all likelihood, so that you can justify trading for the gap between the management accounts and the statutory accounts. Then you'll also be asked for some forward-looking information. So typically a 13-week forward-looking cash flow forecast will be seen as a minimum. Those 13-week cash flows are very, very useful to be producing regardless. So regardless of whether you're considering this scheme, it's a good way to aid decision. It's a good tool for aiding decision-making processes in times like these. And depending on the amount you're borrowing, some banks will be asking to see sort of 12, 24, or 36-month forecast, depending on the nature of your business.
I think that's a point well made, Paul. I think regardless of whether businesses think they're going to need to access one of these loans, they need to be keeping a very careful eye on their cash flows. I mean, you should be almost looking at it every day, every other day, really, and updating it. A question's coming here, Paul, around the use of these loans. I mean, are there restrictions on what you can use these loans for? I mean, somebody's given an example of specific things like rent, salaries, leasing agreements, etc.
the majority of these loans will be there will be some restrictions, yes, in terms of those things which were just described, paying salaries, anything which is supporting your normal cash flows, that will all be fine. Restrictions will be more towards special things. So if you're looking to purchase a business, or if the money is going to be used to pay an exiting shareholder, then I would expect there to be restrictions in place for things like that.
Yeah, okay, that's great, thanks. And Paul, what about larger businesses? There's a different scheme for them, isn't there? They're not able to access the coronavirus business interruption loan scheme.
Yeah, so this was an area where I think there was more constructive movement on Friday. So originally, for businesses with turnover over 45 million, the COVID corporate financing facility was set up, which enabled businesses to sell short-term bonds to the Bank of England. The issue with that scheme is that it requires businesses to have a credit reference from the likes of Moody's. And so for those businesses which were maybe in the 45 million, maybe if they turned over, say, 60 million, that's something you're unlikely to have. So yeah, there was a forgotten middle. So on Friday, the Chancellor announced that there'll be another scheme for companies with turnover between 45 million and 500 million. This will be 80% backed by the government again, and will be for loans on up to 20, and will provide loans on up to 25 million pounds. Interest and fees will be at commercial rates, and unlike the scheme for smaller companies, I don't expect that the first 12 months will be paid for by the government. The scheme hasn't yet to be launched in full. I think the government guidance is that they expect it to be launched towards the end of the month, but I'd say overall it's a positive step.
Okay, thanks. Well, one last question on these loans. If questions come in, do businesses have to be majority UK owned to participate in these schemes?
My understanding is no. If it's a UK business and has the majority of its trading in the UK, then it's okay. Overseas, the ownership doesn't come into it, as far as I'm aware.
Yeah, that's true for the furloughing scheme as well. So on the furloughing scheme, I think it was a general question across all the schemes. On the furloughing scheme, the clarification that came out was around employees working on visas, and even employees working on visas can qualify for the scheme, with some useful relaxations from the Home Office on that too. So if any of the participants are running short of time, need to know about that, drop me a line on LinkedIn or by email or via BIMA. I'll give you the details on that.
Thanks, Tim. Amy, just coming back to you on things other than furloughing. So what about if I've still got work that needs doing, but I can't afford to pay all my employees? We were sort of touching earlier on sort of reduced pay. How do we actually go about doing this? Is this something that we can enforce, or again, do we need a consultation and get buy-in from employees to do this?
Yeah, so you'd need to get consent to reduce anyone's pay. Like you said earlier, what we're seeing at the moment is that most people are agreeable to it. It's such an uncertain time that people would much rather have some kind of job security than anything else. So yes, ultimately you need their consent, and it sounds an absolute alien thing to say, can we pay you less, and people agree to it. But at the moment people are, and how much you need to do that is kind of down to you as an employer. Some people are doing 20% so that it's along the lines of furloughing, but some of my clients have done as much as 50. So and they're getting their staff agreeing to it. So if you need your staff to take a pay cut, just communicate with them, be really transparent. As I said earlier, it might be that you reduce their days so that it's in line with kind of what they're being paid. But yeah, ultimately, as long as you get their consent, you've got options.
Yeah, certainly some of my clients have reduced salaries, and maybe on some sort of sliding scale as well, whereby very junior employees maybe aren't taking a pay cut, but more senior employees are taking more of the brunt. And we can do a mixture, can't we? Because we had a question come in earlier about whether we can have sort of a blanket 10% reduction for everybody, and then have a few staff that are furloughed. I think we can do that, can't we?
Yeah, so you can reduce everyone's pay, and then as and when you need to furlough people, if the work that they're doing specifically has dried up, you can furlough those specific people from the day they don't do any work for the company, and you can keep that blanket pay reduction across the board at the same time.
Yeah, okay. And what about if, you know, realistically, look, we're going to come out of this into a deep recession. We may know now that when we come out of this, we're going to need less people to service our clients. Can we just get on with making people redundant now? And if we do, what sort of process is that? Is that a more involved process than furloughing? Is it going to take longer?
Yeah, so you'd need to consult with everyone. One of the things that you have to do during a redundancy consultation is consider the alternatives. Now, obviously, furlough is an alternative to that, but all you have to do is consider it. So if you know that at the end of the furlough period, the job is still not going to exist, then as long as you can demonstrate that you've considered it, that's all you need to do. You can consult with people while they're on furlough. So I touched on that earlier. That's not going to be considered work. But from the moment you give them notice of redundancy, obviously furloughing is a job retention scheme. So from the moment you give them notice, you'll need to unfurlough them and pay them their notice periods in full at their 100% salary rate. So yeah, you can ultimately, if you know that that's the direction it's going, you can make them redundant or start that process as of today.
Great, but there's no clawback, is there then, of the grants that you might have claimed under the furlough if you do go on to do that?
No, there's not.
No. Okay, great. And what if somebody's been furloughed for a period of time and then asked to be made redundant? Can they insist on that, or again, is that still at the employer's discretion?
No, they don't have to. So when someone's been on layoff or short-time working, so that's when you've reduced their week, after 4 consecutive weeks, they can resign and claim redundancy payment. That hasn't actually been extended to furlough as of yet, because again, it's a job retention scheme. So the whole idea is to keep people in business. So they don't want people to resign and claim their redundancy. So that hasn't been extended to furlough. So at the moment, there's no option for employees to claim that.
Thanks. And we touched on where people stand with regards to holiday entitlement whilst they're under furlough. What about, more generally speaking, just the employees that we're keeping on board? Can we do creative things around their holiday entitlement to ease the sort of the pattern of the work fitting with the staff availability?
Yeah, so you can ask people to take a certain percentage or a number of days of their holiday entitlement over the next few months. You can cancel holidays, or you can say that if holidays are already booked, that there's a no cancellation policy, or you can force it through. So as long as you give the correct notice to force holiday, you can do that. So it's double the amount of days that you want them to take. So if you want them to take 2 weeks holiday out of their entitlement, you have to give them 4 weeks notice, or 4 days holiday out of their entitlement, you have to give 8 days notice.
Yeah, okay, thanks, Amy. And one last question for you. I think we've talked about this before, but just again to clarify, so somebody's asked, if you reduce the salary of employees in April and furlough them in May, which salary will the furlough refer to? Will it still be the February one, or would it be the reduced one in April? I think it's the February one, isn't it?
Yeah.
But yeah, it is. So we always go back. So no matter whether we've put in place some salary reductions, if we're looking at furloughing and looking at what the 80% refers to, we're always going back to the 28th of February payroll.
Yeah, the only time that changes is if someone's on variable pay. So if someone works variable hours, for example, a 0-hour contract, the 80% is either based on the same month the previous year. So in that instance, if you're furloughing them in May, it would be May 2019, or the average of the 2019 to 2020 tax year, whichever one's greater.
Sure, thank you, Amy, thanks. Tim, just bringing you in quickly, somebody's asked a question around rates. I don't think there's anything particularly favourable for this industry, is there? Oh, you've got your mic muted, Tim.
There's the screen's flashing, telling me I'm muted. Yeah, if we cut to the chase and skip over the leisure, hospitality and retail businesses who've got some pretty generous measures, we're on the small business rate relief scheme anyway, so that's only for premises with a rateable value of less than 15,000, which won't be many in London. So if you've got a rateable value business premises of less than 15,000, then you're entitled to a £10,000 grant from local government. All feedback we've had from clients across all manner of local authorities is that grant is blocked up and the local authorities don't know how to pay it when they're getting the money. So my earlier positivity about that grant scheme, I'm afraid I've had to retract. I know, Esther, you've had some experience of some of the London Borough Councils and deferment on some of your clients.
Yeah, I have had a couple of clients where they have managed to agree a 2-month deferral with Camden Council. So they've agreed for them not to pay their April and May rates and instead carry on paying at the beginning of next year in those 2 months where they would have had a free period. And similarly, I've also had clients that have called up and they've been told, look, we can't agree any deferrals at the moment, but actually similarly, we're not doing any debt collection either. So do you know what? Just cancel your direct debit and don't pay it, because there's not an awful lot we can do about it. So, I mean, you know, people have got to make their own decision about what they do. But I certainly have had a number of clients who have just now cancelled their direct debits for their rates. I mean, in terms of rent, you know, all of my clients are talking to their landlords, some with more success than others. Some landlords are just being very unhelpful, others are being a bit more sympathetic. A couple of people have managed to have an actual rent reduction for the period, which obviously that's attractive from a profit and loss point of view, because that's a permanent reduction, albeit they've still got to pay the rent due. And others have agreed with the landlord to have, you know, 3 months holiday. But obviously then that kicks that cash flow can down the road. They've still got to pay for that at a later date. But obviously we have got these protections now for commercial tenants, so landlords can't actually kick people out, which obviously is pretty good. So this might be a good time to bring you in, Ian, if you're still with us. Last but not least, and most depressing till last. So
I'll try not to be.
You know, try not to be, no. And I think we're sort of out of time as well, albeit there's still, most people are still signed in. I mean, you know, businesses are clearly going to be quick, yeah. If businesses are clearly still going to be struggling massively with cash flows during this period, and there's going to be a lot of worry from directors around where that puts them, from a sort of exposing themselves personally around the whole sort of insolvent trading rules. But there has been some welcome relaxation there, hasn't there, Ian?
Yeah, there has, and you know, I think that's very timely. It's only from the 1st of March to the end of May, but basically directors can now continue to trade on and possibly worsen the position of creditors, i.e. taking on credit when they probably know they can't pay it, and not be liable for wrongful trading, which was effectively gave directors a personal liability for the additional creditors that the company would have taken on. Saying that, it doesn't really give the directors much help in dealing with any of the other misfeasances that directors can be kicked for later on when it comes to an insolvency. So my advice for directors is, you know, they're faced with very difficult, uncertain times. We've talked about 13-week cash flows, but you try putting a cash flow together when you don't know when you're going to get your furlough money. You don't know if you're going to get a rates refund. It's actually very difficult to put a cash flow together. So, you know, I'd say seek advice and make sure that you're doing what you can to mitigate your personal risk going forward. There are quite a lot of other insolvency law changes in the pipeline, such as a possible 3-month moratorium where directors can apply for a stay, so they can't be attacked by creditors. They can carry on getting key supplies without having to pay for them. But it still requires a lot of insolvency law to be enacted for that to happen. So it's a bit of a long way down the road. My main concern about all the you know, delaying your tax return, your VAT return, getting PAYE time to pays, getting a business loan interruption scheme payment, is you are kicking the can down the road. These are all payments that the business has to make at some point in the future, other than the furlough scheme, which is a grant. And directors have to make sure that the company can pay it. Otherwise, they are potentially at risk at a later stage. So again, you know, just seek advice. And if the numbers don't quite add up, or you're not sure how to make the numbers add up, that's when you need to talk to, you know, an accountant or your insolvency practitioner, your friendly, lovable insolvency practitioner. Yeah.
So I think what you're saying, the message is that even though there has been some relaxation around these rules, a business still must be carefully monitoring their cash flow, looking at what the future holds in terms of cash flows, and still deciding, you know, whether it is appropriate to go on trading or not.
I mean, it's certainly not a get out of jail free card. That's the point. I think directors can't just go off willy-nilly and do what they want and not worry about any personal comeback.
Yeah, I think that's right. I mean, I think never before has the phrase cash is king been more apt in these times, because a lot of these, government supports and these loans, they're not coming through straight away. So businesses have got to manage in the meantime.
Yeah, exactly. And whilst there's a lot of influence for creditors not to push companies, that's fine for a week or two, maybe a month. But once you get to 2 months, 3 months, and that cash has still not arrived, and it may be that your customers aren't paying either, because they've also got cash flow problems, then, at some point, suppliers are going to want their money back. So you're only going to get so much grace for so long.
Yeah. And we heard from Paul that, with these coronavirus business interruption loans, the government will only come after individuals for the last 20%, the bit that isn't covered by the government guarantee to the banks. So where do people stand with regards to whether they have or haven't given personal guarantees against a loan? What of their personal assets could be at risk?
I mean, if you're giving, first of all, if you're taking a loan under 250,000, you wouldn't have been expected to give a personal guarantee. Saying that, I think you'll end up possibly going and getting funding from alternate sources that will require guarantees. And quite often that's possibly the best way of getting the loan anyway. But it's a danger and a risk for directors. If you're giving a personal guarantee and the company goes into liquidation, it could end up with your own bankruptcy as a director and someone going after a house. I mean, that's all very possible. It's fairly last resort, and hopefully it doesn't get to that stage. But in theory, that is certainly a possibility, and we do see that from time to time. So all the more important that now, rather than kick the can down the road and not worry about it, take the advice at the early stage. Look at your own personal position as well to see that if the personal guarantee hits, you can afford it.
That's great. Thanks, Ian. We don't have any more questions that have come in, and we have gone past our hour. So I think, Holly, if you're okay with that, we'll probably wrap up now. But obviously, if any more specific questions do pop into your head, do feel free to channel those through Holly, and they'll come to me, and then we'll seek to answer them for you. But
I was going to say,
thank you very much for listening.
Yeah, a huge thank you to all of you. It was really interesting, as always, really informative. I think Ian will put you at the top next time, so we don't all have that end.
And he doesn't have to wait so long before he has to speak.
They don't like putting me at the front because I'm it's a bit more of a pessimistic chat, so they like to leave me to the end.
So this session has been recorded and will be available on YouTube. As Esther said, any more questions you've got, just give us a shout. Slack is probably the best place to do so, or if not, email me or Anthony at bima.co.uk. He can also get you on Slack. I think I'll have to ask Esther after this, but I hope that if we continue to get more news from the government as things continue to change, maybe in the next couple of weeks we'll do another session if everyone still has questions. I think it's definitely it's constantly changing, isn't it? So but
yeah, absolutely, yeah, that's fine.
Perfect. But otherwise, have a good rest of your day. So thank you, everyone. Thanks, Tim, Ian, Amy, Paul, Esther.
Thank you.
Thank you. Bye-bye.